Okay, so let's move on to our next and final story of the day, which is the Bank of England coming out and saying that businesses and investors and banks, everybody really, has 6 months to prepare until the possibility of negative interest rates becomes a possibility. Now, this is the playbook of these organizations. When they want to do something, they leak before the possibility that they're going to do it, and they kind of, get everybody mentally prepared for that possibility before the possibility becomes an inevitability. Let's read what Reuters has to say. The Bank of England says negative rates options needs more time, focuses on recovery. The Bank of England gave British lenders at least 6 months breathing space on Thursday before negative interest rates are a possibility, focusing instead on the prospects of a post-lockdown rebound in a quarterly update on the economy. Now, negative interest rates is a phenomenon that we're hearing more and more about in the last couple of years, I guess, as the financial system, the post-Bretton Woods fiat funny money, monopoly money financial system that we're in, where currency is just floating, printed, and not backed by anything, is falling apart. And as these companies have just printed and printed, and the national debt has got so large that they can't even service the interest, the central banks are forced, of course, to start lowering interest rates into negativity. Negative interest rates, at least on a principal level, would mean that users will have to pay to save their money, and banks will be paying people to lend money. Now, of course, normal people like us, we're not going to get paid to take out loans, but the banks that issue us loans will probably get paid to issue money to you. And any money that you put in the bank, instead of you earning interest, which, let's face it, none of us were really getting any interest recently, but instead of you getting interest, at least some interest, you'll have to pay the bank interest, which sounds terrible, pointless, and is not going to work, especially when people realize that they could just buy Bitcoin. Why would anybody pay a bank to look after their money when they could just buy Bitcoin? An asset which is future-proofed, it's hedging against inflation, it has a track record of growing every year in value against all other assets, compared to keeping your hard-earned wealth in fiat money, which has a track record of year-on-year losing money against assets, and not only that, but you can't even hold it in the bank without people charging you. Who wants cash? Not even the banks want cash anymore with negative interest rates. That's basically what negative interest rates is saying. We don't want the cash. Oh, well, if we're going to have it, we're going to charge you money for it because, cash. 2%. All right, so that is it for today. If you have any more time, you don't have a job or family or things to do, then I really would recommend watching the 5 or 6 hours of MicroStrategy's conference and reading more about how the central banks are slowly, turning the tap on the end of the financial system, and making a better case for Bitcoin every single day.